Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, that's exactly what's going on in terms of Ester Industries. 2017, it was stuck in that range from around 35 to 45 rupees. But just taking a look at the graph, it had a big surge from being around a 300 crore market capitalization company to around 450 crores approximately. Let's tell you what the company does first. It has three verticals. One vertical being their specialty polymers business, Polyester Films, as well as the engineering plastics business. What does that mean? Well, the specialty polymers business, that's more into, specialized rigid packaging. And we have a couple of those photographs as well accompanying it. What's the largest part of their business? No, it's polyester films. So they make chips and then they convert it into films. And that's more or less commoditized. So that's basically into specialty, that's into flexible packaging. And finally, we have an engineered plastics division that as well is more or less, commoditized business. So what is the story then going ahead? The management has been stating on their company websites as well as its presentations about the new Ester. What is that? That will be moving from a commoditized business more to a technology-based business. As this, shows you, it's showing you a candlelight moving towards, more modern LED bulb that we're looking at. They're also saying that they're going to be focusing on sustainable as well as profitable growth going ahead. And in the polyester business as well as the engineered plastics, they're one among many producers. So the big focus really is going to be on the smaller part of their business. That's the specialty polymers business. Currently, it is only around 7% of the total revenues. So the focus is really to grow that business going ahead. Well, how have the financials been in the last couple of years? Last year, in fact, it wasn't that good. At one point of time, I remember earlier in FY 2011 odd, they were doing even 80-90 crores in terms of profit. But that's slowly come down, and that's not been very, very good news. But why did the company come on my radar? Well, the first half of this year has at least been better than the first half of last year. Because, in terms of the top line, there has been a bit of a growth. The operating profit has improved and the net loss as well has declined. So that's good news. The management commentary as well is quite encouraging. They are saying that, in fact, going ahead, they're seeing gradual improvement across all their segments, and they're looking at delivering a better performance going ahead. What's the other thing that caught my eye then? The promoters just last year, they went ahead and increased stake by roughly around 5%. That's always a positive sign. And if you take a look at the shareholding pattern, the promoter holds roughly around 59% stake. And you have, good, well-known investor there, Ashish Kacholia, who has nearly around 1.5 to around 2% in the company. And Vital International, that's a South Asia player that has a rather large chunk of around 16%. What's the problem then? Close to around half of the operating profit in the first half of the year went towards interest costs, because the debt in the books is nearly around 300 crores. Can they reduce this debt going ahead? That's going to be the big question. They've laid out a vision 2022, and over there they're saying they're looking at achieving revenues of 1,700 to around 2,000 crores. Currently, they're doing 700 to 800 crores. So interesting to see how that comes about. They've also said that the specialty polymers business, that's where the focus is going to be. Currently, they do roughly around 45 to around 50 crores. They're saying that, in fact, they're looking at increasing that by nearly around 5 times. And the margins over there are much better than the other two commoditized businesses. And in terms of the polyester films, there it's a commoditized business, but their value-added products contributed nearly around 10 to around 15%. Slowly, that's been increasing, and they're saying going ahead, the value-added business will be nearly around 30 to 35% of that segment, and they're going to be increasing their focus on reducing their costs as well going ahead. And finally, in terms of their other part of the business, that's the engineered plastics division. Over there, they're saying that they're going to be focusing on higher margins. So, interesting company, did more or less nothing in the last year, but it came on my radar because of all those factors that I stated out. As always, not a recommendation, just an interesting analysis of this particular company. Back to you.